While most traders obsess over the usual suspects, Internet Computer just broke out of a year-long descending wedge at $4.30 and has already rallied to $7. But that's not the interesting part. ICP is now the most active blockchain on the planet, processing over 1,000 transactions per second, leads all cryptos in GitHub development activity, and just scored higher than Solana and Cardano in security ratings. Yet it's sitting at a fraction of its previous highs. The question isn't whether this is bullish. The data makes that clear. The question is whether this $5 to $7 level holds as new support, because that determines everything. Let's break down what's actually happening here. ICP is trading close to $7 after climbing roughly 60% from the $4.30 breakout level over the past few weeks. This isn't random price action. It broke out of a technical pattern that's been compressing since early 2024, and it's happening right as the fundamental narrative shifts hard. The broader market has been chopping sideways, but ICP is showing relative strength, which tells you something about where smart money might be positioning. This matters now because we're at a critical juncture. The weekly candle closes Sunday, and how it closes determines whether this breakout sustains or becomes another failed rally. The technical setup is textbook, but what's driving it goes deeper than just chart patterns. Three major fundamental developments converged this past week, and they're painting a picture that most people aren't seeing yet. Here's what actually changed. First, ICP has become the most active blockchain globally by on-chain metrics. We're talking 1,043 transactions per second in October, surpassing chains like Solana and competing with specialized high-throughput networks. But speed alone doesn't mean much. What matters is sustained activity, and the GitHub data confirms this isn't temporary. Over the last 3 months, ICP logged 1,251 commits from over 100 contributors, making it the single most actively developed crypto project. For context, that's more development activity than Bitcoin, Ethereum, or any other major chain. When developers are building this aggressively during a huge price drawdown, that's a signal. Second catalyst. The security and fundamentals just got validated by third parties. CertiK gave ICP a Skynet score of 91, an AA rating that ranks it above Solana at 90, Cardano at 88, and Sui at 83. Simultaneously, ICP now ranks as the second largest AI coin by market cap at $2.7 billion, trailing only major players. The AI narrative isn't speculation anymore. It's becoming core infrastructure. Third, and this is where it gets interesting, the ecosystem expansion is accelerating. ICP now hosts 400 projects across DeFi, gaming, enterprise tools, and infrastructure. But the catalyst everyone's talking about is CaffeineAI, an AI-powered development platform launching on ICP that lets users build full-stack applications through natural language. No coding required. The prediction: thousands of new projects could deploy on ICP within the next year. That's not just ecosystem growth. That's a potential inflection point for network activity, which drives token value through staking demand and transaction burns. Connect these dots. The most active development, institutional-grade security validation, and an AI-powered expansion catalyst that could multiply ecosystem size by 10x. Oh, and about 50% of ICP's supply is staked, with exchange holdings at all-time lows. That's holder conviction backed by low circulating supply. Classic setup for supply shock if demand surges. If you want to learn how to actually generate passive income through staking strategies and DeFi protocols like these, I've compiled all those tactics in my complete guide. It's only $4.99, link in the pinned comment. The fundamentals are not promising a moon mission, but they're showing a legitimate revaluation case. Now let's see if the technicals support that thesis. On the weekly chart, ICP has been consolidating inside a descending wedge since early 2024. Those orange dashed trend lines compressing price action for over a year. Descending wedges are typically bullish continuation patterns, And this one broke to the upside around $4.30 a few days ago. That breakout happened right at the point of maximum compression, which is exactly where you want to see it. Price has since rallied to $7, and now we need confirmation that 430 holds as support on any pullback. Moving averages tell the momentum story. Price crossed above both the 10 and 21 EMAs, those blue lines on the chart, in the current candle. Now it's fighting with the 55 EMA, so far winning, which also aligns with the 236 Fibonacci retracement level. I've anchored my fibs from the $15 local top in December 2024, down to the recent lows around $3. That gives us the 618 level at $10 and the 1618 extension at 23. These become my primary upside targets if the structure holds. Volume profile shows the point of control at $5, which we've reclaimed and now acts as support. That's significant because it represents the price level with the most traded volume, essentially where the market found equilibrium during the consolidation. Holding above it suggests buyers are in control. The Heikin-Ashi RSI just bounced hard out of oversold territory, printing its second consecutive green candle. It's now sitting in neutral zone, which means there's room to run without hitting immediate overbought conditions. For my position, I'm looking at a load zone between 5 and 750. That's not a pinpoint entry. It's a range that captures the current breakout continuation while allowing for some volatility. My stop loss sits at a weekly close below $4, which would invalidate the wedge breakout entirely. If we close there, the pattern failed, and I'm out of my short-term position. Doesn't mean ICP can't recover later, but the immediate setup would be broken. That gives a breathing room below the breakout level for normal price movement. Take profit targets are scaled. First target at $10, second at $15, previous resistance and psychological level. Third at $23, and final target at $36 if this really catches fire. I'm not saying we hit all of these. I'm saying these are logical levels where I'll take partial profits and reassess. Best case. We get confirmation Sunday with a weekly close above $6, volume continues climbing, and ICP grinds toward that $10 level over the next month or two. Worst case, we fail to hold $4 on a retest, momentum fades, and we revisit the lows around $3, which, by the way, might actually be the better long-term entry if you missed this breakout. Timeline matters. Short-term, I'm watching this weekly candle and the next few weeks for continuation. Long-term, the fundamentals suggest a 6 to 12-month horizon for the real revaluation if the ecosystem thesis plays out. What changes my thesis? A weekly close below $4 or a major reversal in development activity and ecosystem growth. So, Internet Computer broke a year-long technical pattern, rallied to $7, and is now the most actively developed blockchain with a massive AI catalyst on the horizon. The risk-reward favors upside if this weekly candle cooperates. If you found this breakdown useful, punch that like button. Helps the algorithm get this to people who need it. Join my free Telegram for daily updates on setups like this. Link in the pinned comment. And if you want more L1 analysis, I recently covered similar breakout patterns. Check those videos on screen. Thanks for watching. Never financial advice. See you in the next one.